If you've ever tried scalping gold, you already know it's fast, aggressive, and extremely unforgiving. One wrong entry and you're out instantly. In today's video, I'm going to show you my 3 most powerful gold scalping strategies that work perfectly on the 1-minute and 5-minute charts. These are the exact setups I would rely on if I had to trade gold every single day. Each one is built on clear mechanical rules, and I'll break them down step by step. So by the end of this video, you'll have a complete roadmap to scalp gold with ease. Let's get into it. Before jumping into the scalping strategy, we first need to understand the gold pair. In Forex, gold is traded as XAWUSD, which represents the price of gold quoted in US dollars. In the crypto market, gold exposure is available through tokenized assets like Pax Gold or Tether Gold, which are backed by physical gold and traded against cryptocurrencies like Bitcoin or stablecoins such as Tether. Because of its strong volatility, deep liquidity, and frequent price movements, gold has become one of the most popular assets for traders, especially for short-term strategies like scalping. Despite the Forex pairs like Eurodollar or US stock indices such as S&P or NASDAQ that I prefer using strategies based on liquidity sweeps, the gold pair is most likely to react and respect the major areas such as key higher timeframes, supply and demands, order blocks, and fair value gaps. And it usually swings between these areas. Hence, for having the A+ scalping strategy, we need to take advantage of that by only focusing on scalping strategies that use higher timeframe delivery as the main confirmation criteria. Now, let's start with the first scalping strategy. To apply this strategy correctly, you'll need to work with 2 time frames. First, a higher time frame to analyze the overall market condition. On this time frame, you want to identify a liquidity sweep, a break of structure, and the order block connected to them. Then, you'll zoom into a lower time frame to track the higher time frame delivery and look for reversal or confirmation signals. This is where you'll wait for your entry model to appear before opening a position. Now let's go step by step and see exactly how this setup plays out. In the first step, you need to identify a key liquidity sweep or liquidity grab, along with a break of structure on the higher time frame. Of course, you can do all of this manually, but for this video, we're going to use the Price Action Toolkit indicator to do it automatically. If you're interested in using this indicator, check out the link in the description. It also comes with a 30-day money-back guarantee in case you decide it's not for you. Now, in this bullish example on the higher time frame, the very first thing you want to identify is a bullish liquidity sweep or liquidity grab. In simple terms, you're looking for price to take out a key level, reverse immediately, and then confirm that reversal with a break of structure. To set this up, after applying the Price Action Toolkit, go to the Settings tab and enable the Liquidity Grab option. Once that's activated, bullish liquidity grabs will appear on the chart as small green circles, while bearish liquidity grabs will appear as red circles. Next, go to the indicator settings and activate the BOS and chalk checkboxes. Here in this example, we can see a bullish liquidity grab where price sweeps below a recent key swing low, immediately shows a strong rejection to the upside, and finally leads to a bullish break of structure. In the next step, you need to mark out the order block that initiated both the liquidity grab and the break of structure. This becomes your higher time frame point of interest. More often than not, price tends to revisit this block, where it acts as a demand zone and smart money steps back into the market.